Hello, welcome to this market update through YouTube. I just wanted to highlight Netflix today, who have earnings after the close on Wall Street. It's the first earnings report from the big FANG shares. So that's the big US technology shares, which took a battering at the end of last year for this Q4 earnings season. The shares, as I said, were actually the worst of those FANG shares, including the likes of Facebook and Amazon and Apple. But they've had quite a dramatic rebound this year. The market has performed overall quite well, so you've got to believe that probably short covering has played a large role in Netflix doing so well. Obviously, the other explanation is that investors are expecting earnings to turn around here after a fairly shaky result in Q3, which saw the shares initially spike higher but then roll over. So just want to look at the chart behind us here and go through some of the technical levels. But I think when it comes to Netflix, probably the key fundamental is just the subscriber growth. We've seen Netflix in the past, although admittedly in a more bullish market, miss on earnings per share. But as long as the subscriber growth pointed to further growth, the shares are able to rally on the results. So at the end of the day, it's a growth stock. We're not looking for earnings at this stage. We're more looking for continued strong growth. So that's really the subscriber growth, and to some lesser extent the revenue growth. So the subscriber growth that we're looking for really is the 7.64 million. That's the consensus amongst analysts. Netflix themselves have suggested more like 9 million. So we'll have to see. If it's in that range, I think probably from a fundamental standpoint, that's enough. As far as the chart, you can see that this was the decline we've had since the second quarter. What I've highlighted in the box here is you can see there was a peak up here, a second peak, and then we formed a declining trend line with the third touch. That was right after the last earnings report. So you can see the market closed the previous session higher and then gapped up for a strong open after the results were released, but actually closed the day lower and continued to plummet for the next few days. And as obviously it contributed to the big overall drop in tech shares and the market in general. This year been a very different story. We rallied straight up. You can see that we've paused at the 50% retracement. We gapped through there. You can see the next day closed at this key 340 level, which you can see has been touched on several occasions here. And then we gapped up through 340 yesterday, and we actually opened just above the 61.8% fib retracement. And now we're turning lower as jitters kick in, a little bit above this 61.8 level and above this declining trend line. So from a purely technical standpoint, we've closed above a couple of key levels yesterday, but we're pretty overbought. Look at this RSI down here, well above the 70 territory. Overall, that's positive for the shares. When you look at an overbought level, generally you want to be buying, but you just don't want to be buying at that moment that it's overbought. You want to be buying later on when it's come off those overbought levels. So if you are looking to trade the earnings, I think probably the risk reward is skewed to the downside here. For the downside to come off, we probably need to see the missed subscriber growth. But overall, it looks like the shares are set to maybe break this downtrend. But a better time to buy into that end of the downtrend is probably after a dip, not right here after such an extended run higher. I'll leave it at that. Thank you very much for watching. Good luck for trading, and especially if you are trading on this Netflix earnings release. Cheers, Jasper signing out.